very pleased that our first presentation is from one of our most active external liaisons. It's from Upendra Poudyal, who is the regional representative, I think, for Asia Pacific for the Global Alliance for Banking on Values. GABV apply the triple bottom line approach to people, planet and profit to banking, enormously influential organization. And I'm particularly grateful to Upendra for joining us in person, because as well as being International Standards Day, this is actually in the middle of a national holiday in Nepal. I suspect the two things aren't actually connected, but so we don't disturb the minimum-is day, we will take one or two questions, if we may, at the end of your presentation, Upendra, and then we can leave you alone. I know you have a colleague from GABV who can also help us going forward. And don't forget, you can use the chat function, everybody, if you want to pose any questions. So thank you very much. I hand over now to you, Upendra. You are most welcome.
Thank you, Peter. It's great to be here now. Can we hear?
Yes, we can hear you well, Upendra. Thank you. Yeah, all good.
Namaste to all of you, and greetings from Nepal and greetings from Global Alliance for Banking on Values. It is so nice to catch up with all of you in this symposium. My sharing will be on significance of sustainable finance in emerging economies, challenges and opportunities, and what would be way forward. Emerging economies has gone through impressive economic growth, during the past many years. While they are transitioning from developing phase to the developed phase, they have also some of the characteristics of developed economies. Currently, a few notable emerging market economies are India, Mexico, Russia, Saudi Arabia, China, Nigeria, Indonesia, many more. Amongst the world's fastest growing economies are also from emerging markets. In a way, I would say emerging markets have a significant bearing on the future and resiliency of world economy. Apart from an impressive GDP growth, the leading emerging economies have a strong foreign exchange reserves and represent an important part of the world economy, as they possess strong resource base, whether it be natural or human. They have a growing middle class population and a substantial local saving pool. As such, these markets are perhaps better placed to face the current challenges. However, sustainable development in these economies has been a prime concern, as these countries still need substantial improvement in terms of employment conditions, gender inequality, working standards, climate change, energy supplies, natural resources, and many other critical factors. Apparently, optimum use of their huge resources over long term is critical to gradually reduce inequality and possibly graduate as developed nations as well. The sustainable development of these resources requires a huge quantum of funding source and is very, very critical. Therefore, appropriate mobilization of financial sector is very critical in building a more sustainable and resilient future worldwide. With added focus on these economies, we must increase investments in infrastructure substantially to meet the needs of increased population around the world. This places greater emphasis on sustainable finance that integrate environmental, social, and governance considerations into business or investment decisions, which addresses interests of all stakeholders. This is the key to sustainable development of these countries. Sustainable finance is so incredibly important in the world economy, as it is crucial for the graduation of underdeveloped and developing economies to graduate as emerging economies, and emerging economies to graduate as developed nations. Over the years, many emerging markets have succeeded in attaining global sustainable investments, both from private and public, including of development financial institutions worldwide. This has lifted billions of people out of poverty and has partly improved equality in many emerging economies. We are now in the critical juncture due to COVID that has posed a challenging situation for the future economic development worldwide in emerging economies. The IMF has predicted that all inequality improvements achieved in the emerging economies since 2008 could be wiped out if these countries do not address sustainability. Against this backdrop, it is pertinent to seriously deliberate the current situation and challenges for sustainable finance and investment in emerging economies. All of us gathered here very well know that financial inclusion is an enabler and accelerator for economic growth, job creation, and development. However, providing affordable products and services to disadvantaged and low-income segment is challenging in emerging and developing economies. Banking touches lives of all, as such where and how the financial sector channelizes their resources, determines production and employment, and many other things in the country. As such, significant bearing on the well-being of the environment, society, and country's economy. Companies, including the financial institution, must now prioritize integration of ESG considerations into business, which is the key to embedding sustainability into business processes. Businesses and financial institutions lag behind in this front in emerging and developing markets. Therefore, I think the financial system in the emerging economies must find and urgently adopt an appropriate roadmap in order to build a sustainable business of the future. There are various issues there. Climate change is one of the biggest challenges we face today, with developing countries being most impacted. There is an urgent need for investment to enable vulnerable communities and ecosystem to adapt to and mitigate climate change. Yet funding is in short supply for the much needed transitioning towards renewable energies and green finance. I think a reference to how countries transition in terms of climate change adaptation and mitigation would be relevant to discuss. Amongst the many examples of climate finance transition in the developed nations, I wish to make a reference to Germany as an example. I'm very much impressed with what happened in Germany. Yes, their renewable energy, which was around 18% in 2009, improved significantly to 46% in 2019. In a period of 10 years, this has been possible because of their serious endeavor to phase out of nuclear energy as well as coal-fired power plants. There is strong commitment at all levels in this process. I would emphasize that similar commitment is also required globally, including the emerging economies. Now it is proven to be possible. We just need commitment and action going forward. However, expansion of renewable energies in many emerging countries is progressing slowly. Fossil fuel still dominate their consumption structure. Energy consumption in emerging countries such as China, India, the booming economies of Southeast Asia, as well as developing countries in Central and South America is growing rapidly. Forecasts show that worldwide energy consumption, chiefly in emerging markets, will rise considerably in the coming years. With the growth in capacity of these countries in terms of energy consumption, there is serious threat to enhance CO2 emissions in these countries. How do we neutralize is a big, very, very big question. The International Energy Agency predicts an increase in global energy consumption of more than 25% in the next 20 years. Energy consumption in Southeast Asia, as an example, is predicted to grow more rapidly by 67%, with India alone by 109% during this period. This is a silver, though it is there, but there is a silver lining, however, that it is predicted to decline in Europe by 12%. And the increase in US is expected to remain only at 3%. This is due mainly to continuous improvement in energy efficiency. This is not taken into, if this is not taken into account, the rates of increase will nearly double worldwide. According to a report published in 2018, US $886 billion must be invested annually in the energy industry of only G20 countries by 2050. According to these figures, the capital required in the energy sector in the US, for example, is $158 billion, which is much higher than the current level of investment of only US $57 billion annually. In 2017, China invested around $133 billion to renewable energies, and yet it would need to invest $314 billion annually in order to be in track to achieve the goals of the Paris Agreement. Again, in 2017, India was responsible for 11% of global coal consumption, and up to 82% of the electricity in the country was generated using fossil fuels. In 2019, it was still 79. It does not compare anywhere with what Germany did during that period. Coal generated power in India accounts for more than 50% of the primary energy consumption. India has a big plan to generate renewable source going forward, for which they are planning to invest heavily, $160 billion annually, of which they could achieve just around 10% in 2017. Around the world, nearly 1 in every $3 invested into energy supplies goes to power generation and distribution in developing countries. Excuse me. Sorry. However, the necessary investments could fail to materialize. The above examples clearly show it is very, very challenging in transition towards sustainable financial future globally. Despite growing global investment in renewable for power generation, we are still in danger of losing the race against the growing demand for energy around the world. I think all of these representative data point to the fact in order to meet the investment amount required to catch up the need, mobilization of sustainability-focused finance is inevitable and critical in emerging markets and developing countries. Just recently, the Green Climate Fund, GCF, has recently allocated and approved $1.2 billion for mitigation and adaptation action for climate action. The fund will be channelized towards developing economies, least developed countries, and African states. I must thank that even Nepal is one of the beneficiaries, and Thailand amongst Asia is another beneficiary. For example, DG Germany had offered renewable funds in emerging markets, that was back in 2017 around. The fund includes projects for wind power, hydropower, solar energy, and geothermal energy in Central and South America and in Africa. Again, the social startup Africa Green Tech has launched a public offering of €10 million to finance delivery and installation of 50 solar containers in Mali, thus providing up to 250,000 people with access to clean, cheaper, reliable energy. FMO has supported NMB Bank, the bank I used to work for until 2017 in Nepal, not only by equity, but also a line of credit to refinance clean energy, including hydropower and agriculture portfolio. They have also financed a hydropower project directly and also promoted an impact fund in the country. We do have a lot of constraints. I find normally there are stringent conditions of the development financial institutions, and as such, impact funds have been great constraints for financing in the emerging markets. Cost of finance also goes up in view of perceived country counterparty risk due risk premium and also requiring bond guarantee. This is something which will be shocking to you. For example, in one of the green bond issuance proposal by a bank in Nepal just recently in the international market, it is costing around 9% per annum with a coupon rate of 6% per annum. The structuring of the transaction requires guarantee and hedging of foreign exchange risk. The rate is very, very high by any standard. Thus it is very much expensive compared to external commercial borrowing. Another obstacle that should not be underestimated as far as sustainable finance is concerned, which is a technical one. The structure of these types of capital investments are often extremely complex, and agreement paperwork is often extensive. Apart from this, I think political risk associated with the investments in emerging economies is a major issue. Civil war, corruption, massive shifts in taxation, regulations to the movement of capital, and cumbersome repatriation process are also barriers. Going forward, we have seen there are a number of constraints for the institutional investors in investing more in environmentally friendly power generation in emerging and developing countries. However, our experience shows that these problems can be solved through innovative structures, which has happened in the past. It is also clear that it is not sufficient to simply solve one of the problems, such as buffering of political risk, or lack of liquidity, or complex agreement structures, considering the absolute need to increase renewable energy, both in developed nations and developing countries, and given the investment capital currently available around the globe, it is crucial that we consider possible solutions that could result in a win-win situation for investors and emerging markets. This will require deeper understanding of the possibilities, structures to suit the requirements, close cooperation between institutional investors, their regulatory bodies, financial sector, and partners in these countries. Special green bonds for financing investments for the generation of renewable energy in emerging countries, initiated, for example, by development banks in industrialized nations, has been crucial to address issues of financing. For bridging the gap in sustainable finance, we must explore various ways of using blended finance instruments to create markets and mobilize private investments through collaborations. Funds and DFIs, who are already very well exposed to emerging markets and developing markets, are better positioned to price and manage the risk involved. I think we should therefore encourage collaborations between FIs across sector and leverage international partnerships to accelerate collective progress. Technology will be the main accelerator again, with business models and finance that emerge. Emerging economies also need to build strong governance structure that promotes transparency at a strategic level, which is crucial in developing trust between partners. Finally, let me also take this opportunity to briefly talk about Global Alliance for Banking on Values, as I find greater relevance of the alliance in terms of sustainable finance. In fact, Peter actually introduced Global Alliance adequately. I wanted to say something about it, but JB, what I want to just touch upon is their activities focus on real economy. The members of Global Alliance, their activities focus on real economy, the triple bottom line approach of people, planet, and prosperity to their business model. As such, activities of JV members and partners are very much aligned to sustainable finance. In fact, their members and partners, including Triodos, FMO, and SFRE, have provided funding in developing countries by way of various funds directed towards sustainability-related initiatives. Before I conclude, I wish to reiterate a new economy is needed, which is resilient, that works for everyone and aligns both people, planet, and prosperity. We must commit and take bold action to help realize such an economy. For this, sustainable finance is inevitable. I repeat again, pushing for progress is urgently needed, and we can push hard enough together. JVV wishes to collaborate in any such initiative. Thank you so much for providing me an opportunity to share my views in this symposium. Thank you.
Thank you very much, Upendra. I will just keep you another minute, maybe, with just to help one question back, because I think you set out the challenge really well there, and also the opportunity with developing countries, and with the contribution, as you put it, that actually are better placed in those countries actually to deal with many of the global issues that we have, but the cost of capital does remain high, and that is a big problem. I absolutely agree with you that the blended finance, the using combination like the climate fund to combine with private sector monies can scale this up a lot. My question is coming back to more what we do. Do you feel that if we can target our standards to be used both by the private sector and by the multilateral agencies, that will also help improve the ability to bring blended capital together? Because it seems to me that still the languages spoken by these two parts of the finance world does not always align. I mean, would you agree with that? Do you think that's a challenge we can help to meet?
Yeah, this is one of the this is definitely one of the challenges, and particularly in emerging markets, it's very like they really do not understand and they cannot structure these complex deals. and we have to make it more and more simpler. The deals and the transaction need to be more and more simpler. And then the kind of risk, like I was talking about Nepal, I think this is the common issues with emerging economies. If you are borrowing from the directly from the banking system as external commercial borrowing, the cost is coming at say 3 or 4%. But now, if you want to go for these kind of funds, then it is coming to 9%. And then I think this is the major issue we are having, and that need be addressed to a large extent.
Excellent. No, I couldn't agree more. That's really helpful. Well, look, in the interest of time, I thank you very much indeed for joining with us on a holiday. We can leave you. I think I'm right. We have a colleague staying with us anyway. But I'm really grateful for your contribution that kicked off the session really well. And I think it's very good for us to have that focus on the size and scale of the opportunities, but also of the challenges we have in terms of emerging nations, because it's such a big part of the solutions we need to find in sustainable finance. So thank you again, Upendra. Thank you very much for joining us today.
Thank you, Peter. I may have to log off now. It is like Christmas and New Year for you.
Yeah, we understand. You go and get back involved. And thank you again for using up some of your time. Bye bye for now.
Peter. Thank you, Peter. Thank you so much. Thank you. Bye bye all of you. Thank you. Bye.
Okay. So to follow that, we now have the opportunity to listen into a conversation between two colleagues, key colleagues from TC322, who have deep insight into developments in China concerning green and sustainable finance. We've got Bolu Wang of Shanghai University and Pengcheng Li of the China National Institute of Standardization. And I think you're joining us now live from Beijing. So over to you, Bolu and Pengcheng.
Thank you.
Thank you. So this is an interactive dialogue because we assume this open house should be as interesting and relaxed. So Pengcheng, can you see me and hear me?
Sure. Thank you.
Yes, well, glad to see you here. When you try to persuade me to join ISO, I remember you said that the ISO is a provision of International Sightseeing Organization, but however, it turned out not right. So I'm going to ask you some tough questions today. So this is the diagram we put together to explain the green finance development and trends in China. Can you share opinions on the standardization of the climate response activities in China with the audience? Thank you.
Thank you, Bolu. I think climate change standard in China, we have done some study and we found it's a very comprehensive framework. So we include different technology, different area. For example, it's include the carbon reduction standard to support carbon reduction, support the carbon removal, and also some market scheme like trading systems. We need a standard. Green finance, sustainable finance, we need a standard. And in the perspective of technology, we have a lot of maybe thousands of standards for energy, energy efficiency, renewable energy, also clean usage of fossil fuel, and we also focus on some key standard like carbon management, environmental management, carbon footprint. So it's a very comprehensive, and we are looking for a new way to make it more coordinated and more harmonized. And it's something from the end of industry. So I'm also wanted to know from your perspective, what is your understanding of green financial system and how this system can integrate with industry? Thank you.
Okay, I think the sustainable finance has a key role to play in delivering on policy objectives under the European Green Deal, which is the new growth strategy of the European Union. So similarly, green finance plays an important role in supporting China's reform plan for promoting ecological civilization. So which incorporated the idea of respect, protect, and stay in tune with nature. It emphasized that the ecological conservation is vital not only to sustain healthy economic development, but also to political and social progress, and must therefore be given a position of prominence and incorporated into every aspect in the whole process of economic, political, cultural, and social development. So based on this view, you can think it as a counterpart of the European Green Deal. I hope this can help our ISO colleagues better understand the role of green finance in China. So last week, one of the recipients of the 2021 Nobel Prize in Physics, Laurent Giorgio Parisi, he said that it's clear that for the future generation, we have to act now in a very fast way. But all of us need to ask, for industries and the financial sectors, we need to ask how large amount of investment is needed to finance the actions to be taken in climate response and battling pollution and environmental degradation. So investment gaps of a single country is at the scale of trillions of dollars, which is not affordable solely by the public sector. And the green financial system is created to first mobilize the private sector to join effort on supporting the green transition of the whole economy. And second, protect market integrity by preventing greenwashing. And third, control the financial risk stemming from climate change and environmental degradation. So with this background information, I believe it is easy for our audience to understand the important pillars of green financial system I listed on the diagram. According to the China's President Xi Jinping, to serving the real economy is the duty and purpose of the financial sectors. So asking our banking colleagues here in China, so what do you want to finance with the green financial tools? I will tell them, go ask Pengcheng. He knows from the standard, which green industry has many standards, and then you can, these are the industries for them to consider. So here I have another question for you. So on the left-hand side, we have the China energy efficiency label. So what is the role of energy efficiency standards in the system you introduced to us?
Yes, as you know, the energy conservation and the energy efficiency has the most priority in China's policy of energy and also in policy of climate change. We have more than 300 standards for energy conservation and energy efficiency. For the appliance and the equipment, we set up standard, and so you can easily identify what is most efficient, what is not. So I found some financial institutes, they can use this standard to select some green manufacturers. They can produce most efficient product. So I think that's good example to use this kind of energy efficiency standard. And we also know some standard for energy management in some high energy consuming companies. So when they establish that kind of energy management system, they can improve their energy performance, reduce carbon emission. So it's also a good standard. So for financing institution, they can understand, yeah, which one is better, which one has good capacity to improve energy performance. So yes, it's very new for me, and my background is technology. But I found, yes, there's such kind of standard, it could be adopted by finance community. It's very interesting, And I think it's a very big market need to set up such kind of standard to support green finance. So we found China published its green bond taxonomy on the same day when the EU published the Climate Act. So it's a part of EU taxonomy. So can you share some insights on this kind of taxonomy? How is the linkage to the technical standard? I think it's very interesting.
Yes, you're absolutely right. And we cited a lot of in the version published by the Central Bank of China. In the taxonomy, a lot of energy efficiency standards are cited in the manufacturing section. So taxonomy is a basic policy instrument to clarify what activity are eligibly green under the context of an economy. So in the newly published ISO TR32220, the term sustainability taxonomy is included as a basic concept. So one feature I hope to share about China's green taxonomy is that some activities do make contributions to social development goals. For example, the ecological and environmental related sector is a big category in the China's taxonomy. So under this category, forest resource cultivation and under forest economy of planting and animal farming could contribute to poverty reduction. So by cultivating forest on the edge of desert, barren land, and rocky land, firstly, the land degradation can be slowed and gradually stopped. And secondly, inclusion of forestry offsets in the carbon emission trading scheme shall provide additional income to forest managers. And the bamboo forest management carbon sequestration project populating in the southern and western part of China is a good example. And thirdly, the ecological system under the creative forests enabled the under-forest economy, in which the farmers and workers can produce third-party verified ecological products for higher market prices. So a lot of, actually in China and this market, when I understand when we're making the verification standard, we cited a lot of international, or referred to a lot of international standard. Did China adopt international best practice when making its own carbon emission related standards? Can you give us an example?
Yes, I think it's a very important area, and we have done some study on the taxonomy, and we found maybe half of them already have standard, but others not yet. So we think the international best practice is a very good source for our standard system. So we have principle, if it's okay, we should use the international standard normally. So in China, you know, like environmental management system, 14,000 yuan, energy management system, 50,000 yuan. We use the same with the international standard. So China has a biggest group of user of such kind of standard. And also for climate change, emission quantification standard and the carbon footprint, we also want to use the same standard with international standard. And I think the standard of 322 and it has high potential to be introduced to China and to be adopted by the industry, finance industry, and as an international practice, good practice. So my question is, I hope to know on your observation, you know, you're from the finance, you also understand the technology. So what are the trends of sustainable finance standardization? What is the important topics in the future? Thank you.
I cannot say I understand technology. I might understand technology with your help. So in the future work of the terminology working group, we will track the global and regional trends of sustainable finance and green finance. So I would like to welcome experts from financial institutions and industry to join this effort. So right now, there are a few challenges calling for better solution. So first is preventing market fragmentation. And second is prevent greenwashing and sustainability washing. Third is disclosure for transparency, but with lower cost. And fourth is quantify the financial risks associated with climate change and environmental degradation. The fifth is better connecting green projects with investors. So where we have challenges, we're creating innovative solutions. And standardization is the best, standardization will help us expand and spread the best practice in many different countries and many different regions. So this is just my personal observation. I believe that our colleagues, ISO colleagues today, they will be able to share their views during the coffee roulette. So thank you, Pengcheng. I feel very exciting to see you here on the meeting, although we haven't seen each other due to the COVID-19. I look forward to seeing you later.
Thank you, Bolu.
Thank you. So that's all. Mike and Peter, back to you.
Thank you, Bolu. Thank you, Pengcheng. That was very insightful, actually, very useful to hear what is going on in China and the role that standards is playing. It was quite illuminating. What I think we'll do is we'll run through the next two presentations as well, and then take sort of questions and answers as a panel. So hang on there. If there are items which have come up from your discussion, then we will pick them up after we've heard from the next two speakers. So thank you again. Very, very useful. So we now move to Japan. I'm delighted to introduce Takuma INAMURA of the Ministry of Economy, Trade and Industry. I think METI is the acronym always used. I see that's on your label here on the meeting as well. Who will present to us on Japan's perspective of how sustainable finance can contribute to a healthier workplace. So Takuma, please.
Thank you, Chair. Good evening from Tokyo. I'm Inamura, Director of Healthcare Industry Division at METI, Ministry of Economy. So today I will explain our initiative, Japanese government initiative for making workplace healthier. I hope there'll be some relevance between our initiative with this discussion on sustainable finance. So let me start with the background. Next, please. As you might know, Japan's population is decreasing with very rapid pace. And also, Japan has high rate of aged people. Currently, aging rate is 29%. I think it's one of the highest in the world. And it is increasing toward the middle of the century to around 40%. And this makes a huge challenge economically and also in social aspect. So next, please. So if we imagine the working population has to financially support the retired aged person. And if we assume the people will retire over if they reached age 65, it's going to be a very difficult situation for Japanese economy and the society. Please see the upper part of the diagram. And so currently 2.1 working people is supporting one aged people. But it will change toward 2065. Please see the upper right part of this diagram. So then only 1.3 working people have to support one aged retired people. So this doesn't look sustainable. But if we can assume that people can be healthier, social, and can work until 75, the scene will drastically change. Please see the lower part of this diagram. And in 2065, then 2.4 working people support one age. So this seems rather sustainable. So the Japanese government would like to accomplish this by making people healthier. But it's a very difficult thing. And so please see the next slide. But there's some good symptom. This is a score of physical strength test. And as you see, the lines going upward, For every age category, the score is improving. So I can say that the level of the physical strength test for people in 70s is reaching the score of the 60s of 20 years ago. So in the last 20 years, the Japanese people are getting younger in terms of physical tests by 10 years. So we can support this positive changes by making people healthier. So next, please. So there are several policy measures to making this policy target of making Japanese people healthier. One initiative is health and productivity management. This is an approach to focus on health management of employee in their corporate strategy. So we're trying to nudge corporate managers to make their workplace healthier. If the workplace became healthier, there'll be multiple benefits. As you can clearly see, number one, it's good. It will improve employees' health. So this is the target of the Ministry of Health. But we are Ministry of Economy. So there are other aspects. Please see the number 2. If the workplace gets healthier, it will enhance corporate performance through employees' productivity improvement. And also, we expect more investment in prevention and health promotion market. As you see in the bottom of the chart, there are many expectations on the investment in employees' health. Next, please. So let me explain what my METI is doing. In 2016, METI started issuing what we call Health and Productivity Management Certificate for companies which apply by filling out 200 questions in their questionnaire. And we assess these questionnaire. And if the company meets certain criteria by, say, providing the employees some certain kind of program for making the employee healthier, or make some commitment to make their workplace healthier, and make some disclosure on important KPIs in this effort. So if these companies clear certain criteria, they will get certificate for health and productivity management. The number, as you see in this chart, the number of certification has rapidly increased in the last 5 years. So in last year, there was around 12,000 applicants, and the certification we issued was 10,000 annually. So this is a rapid growth in this certificate. Please see the next slide. So these are the company ranked as the best of the health and productivity management. You can see the global brands like Toyota, Canon, Fujitsu. And I like emphasize the point that the most valuable company in Japan listed in Tokyo Stock Exchange, and their index called Nikkei 225, and 82% of the company composing Nikkei 225 as applicant of this health and productivity management certificate. So I can safely say that most of the most valuable companies in Japan are the applicant for participant of this health and productivity management. Next, please. So what will be the benefit of doing the health and productivity management? As you see in this chart, the one example is lower turnover rates of the employment. employee. And the next slide, please. Also, if we pick up the average of the health and productivity management certified company, the performance of the stock value overperform the index of topics. So this can be another aspect of the benefit of health and productivity management. Next slide, next please. So we think this will be a category of S social in ESG investing. As you see, health and safety is categorized in this ESG investing. And also you see in the lower part, GRI issue the guidance of the disclosure of the health promotion. So we think we are in line of this. And if we're discussing with the investors about the difficulty of S sector of the ESG, they always complain about lack of information. Next, please. So we are disclosing the information we gather through this certificate. If you go to the web page of the METI, you can see the score, detailed score of the companies, which applied for the health and productivity management. So we disclose that evaluation for top 500 companies. And the total market capitalization of these companies we disclosed about 250 trillion yen. This is roughly 1/3 of the Japan's listed companies' value. Next, please. So this is a summary of each applicant, and you can see detail of each category of their effort in making the workplace healthier. And you can also see in the right bottom the historical change of the performance of these companies. Next, please. Japan revised the corporate governance code of Tokyo Stock Exchange, which asks the listed company for certain principles. And as you see in the red letters, making workforce healthier is among the criteria, along with diversity and human rights, along with these important aspects. Next, please. So there's one example of a recent development by a company committed to health and productivity management. Nomura, as you might know, is the biggest brokerage in Japan, banned smoking during working time, even those who working from home, as you see in this article from Financial Times. So some company is very serious in making workplace healthier and making some commitment and disclosing their performance in this health and productivity management. Okay, and can you jump to page 18? I'm running my time. Next. Next. So we think there are several merits of the health and productivity management for the stakeholder. So it's good the company disclose the information with its stakeholder, and stakeholders, including financial institution and labor market, can evaluate the company's effort in making workplace healthier. So next, please. So now I'd like to explain a little bit of our effort of this international dissemination of this initiative. Next, please. There's similar awarding system in other countries, as you see in German Corporate Health Award or US Excellence in Corporate Health Achievement Award. This the system, similar system by evaluating the applicant's level of achievement and issuing certain award. And but this system doesn't have a comprehensive disclosure system. So I think it's good if we have some kind of convergence in these kind of award or evaluation of the company's effort for making workplace healthier. Next slide, please. There are several NGOs in the area of decarbonization, disclosing information through collecting the response to questionnaire from large company. CDP is, of course, very famous. But I don't think there's many NGOs in successfully making disclosure in the area of human investment. I found one NGO which is Workforce Disclosure Initiative, which is not focusing on healthy workplace, but also include healthy workplace in the topic of the questionnaire. And the number of respondents, as you see in the left-hand side of this chart, is the number of respondents is increasing. So I think while quantification of the level of effort in the area of S is quite difficult in comparison with the effort in decarbonization. But I think in the future, this kind of area will develop. So next slide, please. METI asked OECD to make research on workplace-based health intervention by providing funds for the OECD. And it will issue a report sometime next year by collecting information on their member country, on the government effort for making workplace healthier and the mechanism for disclosing this kind of information in terms of ESG investment. Next, final slide, please. In the last slide, I will explain what we would like to do in the future. And so currently, we just started in 5 years ago, we have started a local initiative of health and productivity management inside Japan. And it was successful in rapid expansion inside Japan. But we'd like to make it to the system, which will be led by the private sector in the future. So in what happened in the environment, decarbonization, there are many private certification and rating agencies. So then the government don't have to make all these kind of evaluation by collecting a questionnaire. So we'd like to shift this initiative to private sector if this momentum grow enough inside Japan. And finally, in the right-hand side, we'd like to kind of propose this system to international discussion. But we think there's some, let's say, difficulty. I mean, this is a quite unique system based in Japanese health promotion system. So it should be modified, and we need some kind of convergence to make this a kind of global standard. So I'm happy to have discussion on with you. I guess you was a mafia in the sustainable finance, and I hope this kind of health discussion will be interesting for your discussion in sustainable finance. Thank you very much.
Thank you very much indeed. This is an excellent example of what this event is designed to do, to go into subject matters which I think are, relevant and interesting, particularly as you say, it is quite hard to produce models with the S part of ESG, and this is a really good example. You have provoked some good questions, but I'm going to carry on to the end of this session and then take questions for all of the speakers, if that's okay. So I'm very pleased to keep any questions coming on the chat. So the last talk of this first section, before we take some Q&A, is from Phil Ludvigsen of First Environment in New Jersey, United States. So he's up early to join us. Thank you, Phil. He's an international expert on green and climate bonds, and he's going to talk to us about something much more core to TC322, which is the new groundbreaking ISO 1430 series. And I think parts 1, 2, and 4 were published last month, and they cover the process for green bonds, loans, and debt instruments. So Phil, tell us more.
Thanks, Peter. I appreciate that introduction. I would be remiss if I didn't point out that this presentation was actually put together by John Scheidler, who is the international convener for ISO 14030 for green debt instruments. I'd also like to thank all the members of the expert working group, some of which are on this call today, and members of TC322, France Connect. I see Rob Fowler's on, and many others. It was a tremendous effort, and we appreciate it. So next slide, please. Just a brief history of green bonds, and many of you may already know this, but it goes back over a decade when we were looking at the European Investment Bank issuing the first unlabeled green bonds. And I should say green bonds have been around for a long time. Any bond that went to funding projects, assets, activities that had an environmental benefit, such as pollution control, water, cleanup, anything that had an environmental benefit would be considered a green bond. But it's been in the last decade that it's been actually labeled a green bond, with the World to label their funding instrument as a green bond. In 2011, the Climate Bond Initiative launched, and I remember meeting with Sean Kidney in 2013 and complaining about how their prototype standard wasn't, verifiable. And he said, well, Phil, what are you going to do about it? How are you going to make it verifiable? And I said, well, go hire somebody that understands standards and we'll work it out. And to make a long story short, he hired Rob Fowler, and we did work it out. We had version 2.0, and since then it's evolved into a second generation or third generation. The Green Bond Principles came out in 2014, and this was more of a market reaction with a focus on transparency to the market and making sure that there was some high level consistency to these debt instruments. In 2015, China published the Green Bond Endorsed Project Catalog. To me, that was sort of the first organized attempt at a taxonomy for identifying eligible projects and assets. In 2018, we started to see the green bond market take off, with the EU following up with their regulation actually requiring that a standard be developed along with an official taxonomy. And more recently, we've seen the green bond market top over $1 trillion. And as Peter mentioned last month, we've actually published 3 of the 4 parts of the green debt instrument standard. This is a big deal because the market has been calling for an international standard of rigor for many years, and now we have one. Next slide, please. Now, there's 4 components to the green bond principles, and I'm going to assume most of you are familiar with these sort of pillars. The use of proceeds, meaning how the green, that the proceeds must fund green projects. And defining green, I won't even get into that. It's a long story, but it suffices to say the taxonomies serve as a procedural method for defining, from a standards standpoint, what is green. The next pillar is the process for project evaluation. There has to be a mechanism, procedures, maybe even controls on how you select and evaluate potential or projects that have been nominated for funding. Thirdly, the management of the proceeds, making sure that the proceeds that are raised actually go to the green projects and that unallocated funds that are used appropriately. And fourthly, there has to be some reporting around primarily what is intent in the pre-issuance, and more importantly, perhaps, is the impact after post-issuance. Now, keep in mind, these are principles. They're not requirements. These are designed for the voluntary green bond market. Next slide, please. So what are the new ISO standards? Well, there's 4 parts. The first part is green bonds. Second part addresses green loans. The third part, taxonomy, is still under development. And if any of you have worked on taxonomy development, you'll understand why. It's not an easy thing. It's almost analogous. You know, I worked for KPMG for 6 years. I would defy anyone to define profit, depending on where you are in the world. It's not an easy thing. What is a profitable company? From one region, a profitable company could be considered a going concern in another region. And lastly, we have part 4, the verification. Next slide, please. So how were these standards developed? Well, it took a lot of effort. There was, it was done under ISO Subcommittee 4, which is on environmental performance evaluation. There was 8 in-person virtual meetings held in various parts of the world from December 2017 to last April, or April 2021. And the number of participants, and I've been involved with ISO standards development for a while, and I have never seen such a variety of experts involved in development of a standard. This included representatives from the ICMA, International Capital Management Association, the people who developed the green bond principles, the Loan Market Association, the folks that developed the green loan principles. We had Rob and colleagues from Climate Bond Standard. We had other national accreditation bodies. We had IAF dropping in. We had, most importantly, oh, I have to excuse me, my cat wants to be part of the presentation. We had representatives from some of the largest banks and bond underwriters in the world. And their participation was crucial because what they brought was, again, a focus on, look, we need something that supports transparency, but is practical. And we didn't want to put out a standard that would somehow inhibit the growth of this emerging financial market. We had non-governmental organizations, universities, conformant assessment bodies, and these folks were from all over the world. Next slide, please. So drilling down a bit, the characteristics of part 1 and 2. Both part 1 and 2 have requirements, which include the shall statements. They also have guidance, which include should statements. And the shall statements are important because it allows verification, and it also lends itself to regulatory regimes. We've seen ISO 14064 related to GHG reporting, carbon offsets verification being incorporated into various regulatory regimes around the world. And both documents address eligibility, management of proceeds, environmental performance and reporting, the 4 pillars of the green bond principles. Next slide, please. So drilling down a bit more on part 1. Part 1 recognizes projects and assets that are identified in the taxonomy. As I mentioned, that's how we define green, is through the use of its eligibility taxonomy. It also recognizes other taxonomies, and it's became clear early on that no single taxonomy could really capture the differences and the needs from different countries or regions within the world. What we were trying to do is define one, not necessarily unifying taxonomy, but one that represented some consensus on good practice. But we realized that other users of the standards may wish to use their own taxonomy. Now, there was some concerns about taxonomy shopping. So there are requirements on what is a suitable taxonomy, and you'll find them both in parts 1, 2, and 3. So it's not you can plug in any taxonomy. You're going to have to plug in one that is reputable and that meets certain requirements. The management of proceeds follow the green bond principles. They should look very familiar. The environmental performance includes impact statement assessment. Now, this is a bit more rigor than what we typically see in the green bond market today, involving environmental performance indicators. But we've seen over the last couple of years an evolution to more rigor and more impact reporting. And I should say impact reporting is a requirement. This is something that was discussed at length, but it's not surprising that Subcommittee 4 on Performance Evaluation would make a requirement that if you're going to evaluate performance, there has to be something to evaluate. What gets measured gets managed, and what I like to add, what gets verified gets believed. Next slide, please. Now, part 2 just shadows part 1. However, the biggest difference is the focus is on loans as opposed to bonds. And green loans can come in primarily 2 different flavors. And in the standard, it refers to standardized loans where the documentation and responsibility for conformity falls on the lender. Now, the standardized loan, in other words, it's commonly referred to as a retail loan to consumers. And your average consumer isn't going to have the wherewithal to really conform to an ISO standard typically. They may be able to fill out a form, but it really falls on the large banks that are issuing the loans to conform with the standard. Now, specialized loans, on the other hand, or commercial loans to large companies, the documentation responsibility for conformity falls on primarily the borrower, which typically are large, medium to large size companies. Next slide, please. Part 3, the taxonomy I had mentioned, it's still under development. We have requirements if you want to use other taxonomies, that's possible. You can, it was designed to be a plug and play, but it does have to fit. You have to follow that protocol to plug it into the standard. Now, and I also mentioned the reason that was done is because of the concern around taxonomy shopping. It is organized like most taxonomies around economic sectors, and it describes projects and assets that can be considered green with or without threshold requirements. Typically, where we could agree upon threshold requirements, they're in there. There's also certain projects or activities that are excluded. And these discussions were pretty intense, but I think we've come up with what I would say are reasonable requirements. Now, taxonomies are emerging around the world at a fast pace. Next slide, please. This slide just gives you a quick example of different taxonomies development, where we have some taxonomies already in place in China and Europe. They're going through different evolutions. We have evolving taxonomies. They're in the light green. And we see, you know, some big parts of the world, United States, Australia, and, you know, South America, where we don't have taxonomies in place yet. So it's my hope that ISO's sort of default taxonomy or common practice taxonomy can at least fill that void. Next slide, please. Lastly, part 4, verification. Any of you who are familiar with GHG verification of GHG inventories, footprints, carbon offsets, will be familiar with this, will be quite familiar with how this standard is structured. It follows suit. It involves accreditation by the verification bodies to ISO 14065, which was recently updated to include environmental information. And 14064 is no longer just GHG, it's environmental information, so green information. The body's assessments against these requirements are required in parts 1 and 2. There is competency requirements. That's something that was slow to develop in the GHG carbon world, but it's in there for green bonds. And lastly, part 4 recognizes ISO 14064 part 3, as well as financial standards such as ISA 3000 or ISRS 4400, commonly known as the agreed upon procedures standard. Next slide, please. So in conclusion, we believe the ISO standard is filling a gap in the marketplace. That's our hope, where there has been a lack of standardization. And we do want to tip our hat to others in this area, such as Climate Bond Standard. It's been around, it's served as and continues to serve as a great program for a subset of green bonds involving climate. And I should say the Climate Bond Initiative is expanding the standard to include more than just climate. The taxonomy part 3 should be out early next year. It's gone through and continues to go through a lot of comments and discussions. And I would say it will remain a living document. There is a process that can actually be in part of the standard. It's called a process test, where the taxonomy can be added. If someone has a new technology that wants to be considered green and applied into the taxonomy, there's a way that it can actually be added without having to reissue the standard. So exciting flexibility there. And lastly, we believe that the standard will address probably the biggest impediment to the green bond market, which is greenwashing. Thank you. Oh, here's John's contacts. I suggest if you have any detailed technical questions, reach out to John or myself. Thank you.
Thank you very much, Phil. That's really good, and really appreciate you taking us through that, because I think there's so much quite fundamental ground that was covered in developing these standards, which is going to be useful time and again, actually, in the future, as well as for their specific role. That's prompted some more questions, so I'm going to let our coffee break just, I'm going to eat into that just a few minutes so we get some time. If we do this so that if you're able, when you're actually speaking, to put on your video, then that will be great. And what I'd like to do is just over those last three presentations, look at the questions, and I'm going to kick off by actually asking Adriana Kokornik-Mina to ask her question of Takuma Inamura, which I think is about the very impressive take-up that you have on your companies for the Health and Productivity Management Certificate. But I'll ask Adriana to ask the question herself, if you could do that.
Yes, thank you very much. Takuma-san, my question has to do precisely with how quickly and how diverse was the uptake of the certification scheme. And given the pledge that Japan has to be carbon neutral by 2050, what lessons could you share with us from your experience with this certification scheme?
Okay. Sorry, for the first part, I can catch your comment. Are you asking about the, I would say, duration for the assessment of the application, or what was the question in the first half?
Yes, pardon me. I am asking, you were very successful in growing the number of companies that wanted to be certified. And in the last number you provided, there were 12,000 applications and 10,000 certifications. And this grew very quickly from almost nothing to over 10,000 certified companies. It is very quick uptake. And it is a tool you're using to resolve a policy challenge of resulting from aging population. I am asking, what could be lessons for other similar efforts that want to help the government of Japan, in the case particularly on the net zero pledge that it has, if there are any, how to increase the uptake of this type of schemes? What worked for you? What made it possible?
Okay, I think the important element of this success, I would say, is make the company's effort visible. So a company can put, let's say, on their webpage that they are certified. And there are several ranks among these certifications. So naturally, the company would like the highest award. So this is kind of pressure for the company to invest on the workplace health. So it was good that through our discussion with major industry group to show government seriousness for this initiative. And so once it started, that there'll be some peer pressure among the companies that if the company A is graded as the highest level, that the management in company C or B or C or D would like to have the similar one. So this kind of peer pressure worked well, I think. And one good thing is it is very visible. The company will be awarded. And now this year we started to disclose the scorecard of the top 500. And this will make more visible or of each company's specific effort. And especially some investors are looking toward this kind of effort. So this would be good. But I think this area is lagging far behind the area of decarbonization because we don't have global standard on how to gauge the effort. In the decarbonization, it's easy to gauge the reduction of carbon emission by tonnage. Or you might have some standard on the how I say rating. So we have difficulty in doing this kind of thing in the area of social. But I think we can expand this kind of effort inside Japan to other values like human rights or diversity inside Japan. And I think it will be good to have exchange knowledge among other countries on this field.
Thank you very much.
Thank you.
Thank you. That was very interesting. I'll ask directly, if I may, for the next question on behalf of the questioner to Phil about the Green Bonds 1430 series. I think the question that I think would be really interesting, if you have any insights for us in TC322, is you've successfully navigated a standard out in a fast-moving field, and one of the debates that we have a lot about is how to create standards which are sufficiently agile, if you like, given the way in which sustainable finance as a whole is developing, and green debt instruments is no exception to that. I just wondered what debates you had and any sort of tips or tricks to do that, Phil.
Well, I would say start with a convener that is very tactful and sensitive and neutral. And John Scheidler, we were blessed with that. He's also, I think, a European language PhD in European languages. So he's multilingual. And you need that kind of catalyst that can bring in different viewpoints. The second thing is we had, as I mentioned, members of the banking community and finance community. And they're really hard to get. And they're not gonna, we were fortunate we could have, Marilyn CC from JP Morgan fly into Paris for, and because she had other meetings there, and she gave us insight for an hour or two. But even if it's an hour, or if we had someone from BlackRock or PNB, Bearpass, these banks, if they're just calling in, getting their insight is critical, because we did not want to develop something in an echo chamber, right? Where we have a bunch of technical people like myself that just, are so laser focused without getting the big picture. That would be my advice.
Brilliant. No, I think that's a really good message, and I think that's one that we need to take on. For the next question, I'll invite Pedro to ask that himself.
Thank you, Peter. And it goes again to Philip as well. So yeah, it's all about bonds as well. So well, first, thank you, for this great summary overview. Yeah, that's actually, the standard, and reviewing the standard was how I actually got involved into the whole, ISO. So it's good to see finally, see it out. Now, one question that I have is regarding, this new trend that has been started, couple of years ago, but actually ICMA released, it's also its principles for sustainability-linked bonds. What do you think about these new type of financial products that are appearing now, such as this one, which essentially, my understanding so far is that they try to bridge sometimes the gap that exists between, green bonds and non-bonds, that sometimes the word is not black and white. And unfortunately, sometimes people say that all these taxonomies are a bit restrictive. How about all of this work that needs to be done in terms of transition and all these different gray scales and the sustainability link or KPI linked bonds? So lots of data coming in could potentially fill the gap. What do you think about that? And how do you think, there could be a bridge with what already has been done with green bonds to incorporate this new type of ideas?
That's a great question. And, thank you for your support and help with the standard. There are a lot of gray areas, and unfortunately, it's going to take a long time to work through some of these things. As far as sustainability linked bonds, I believe ICMA has a transitional financing handbook that they put out last year. And I believe I've seen some China bank, the Bank of China, use it. It's very difficult to get verification. I think they even had attestation around it, but I'm getting too technical. It is possible. The real challenge is linking it to what? You know, what is the impact? Would the impact happen anyway? Is it additional? What's the baseline? Those are big issues, you know, and but they can be worked out. They're not easy, and I'm not sure the large investment banks are going to want to take the time to work those things out, right? Because they're doing deals, they've got transactions they want to do. But then on the other side, you've got huge pension funds and other asset beneficiaries that say, hey, take the time or else we're not investing. So between those two forces, I think we'll come up with something.
Thanks, Jim.
Great conversation there. I'm conscious of the time. I'm just going to take actually one more for one more on the Japan contribution from Inamura. So Inamura, if I could just, this is really both a question, but also maybe something to following up. In terms of the opportunity for more international standards in the area you talk about, I wonder whether this is also something you have discussed with the ISO Committee on Occupational Health and Safety Management, because they would be, I'm sure, very interested in what you had to say. And if not, then we'd be more than happy to help you set up a liaison there. But I'm just interested as to whether that community, occupational health and safety, have been, in the international sense, have been in any way involved in the work you described.
Thank you, Peter. Thank you very much for very nice suggestion. That actually, I haven't reached the ISO TC for the occupational health, but while we were discussing this policy with the advisory board, the chair of the advisory board is head of academics on this area in Japan, and he has an international connection with US and European academia. So I think we can reach that TC, but we just started this kind of effort of discussing with international community. So this is just the first step for us to talk with some ISO fora. So it's good to have discussed this kind of topic with other fora too. Thank you very much.
Okay, thank you. That's great, and we're very grateful to you to get such an early insight into it. It's fascinating, and it's a very interesting use of this particular meeting to understand about these issues and bring a focus on S as well, which is good.